Happy Sunday, everyone. We have a very special guest this Sunday evening, Brian, who is one of our partners and also a good friend of mine and really a mentor at this point from all the stuff he's taught me. So, Brian, thank you so much for joining us today.
Great to be here, Jake. Let's, yeah.
I have what looks like a milkshake here. That's because I don't know how to pour my own beer. It's actually this new IPA called Heineken. So, never heard of it before. Just kidding. Couldn't find anything good before the show. But we're going to do a virtual happy hour, just a quick virtual cheers to everybody. I remember when Brian had his chart summit back last year, we did something like this, and I thought it was really cool. So just wanted to, do it here. And hopefully everyone's enjoying a cold one. And really today is going to be two segments, right? So it's going to be one, introducing the new Alpha Trends Anchored VWAP ribbon, as well as the automation features of the Alpha Trends Anchored VWAP. So we have a ton of different things to go over. Brian, I'm going to let you do that in segment 2. But before we get started, I think something we do a lot on this show is go over charts. But we don't really talk necessarily sometimes about the experiences and maybe some of the things that other people are experiencing that we maybe have experienced 10 years ago and made those same mistakes. And so, I want this first segment to really be about, your experience in the market. I'll try to add mine. It's not even comparable to yours, but if there's something I can throw in there. So I'm going to just kind of go through a couple questions and kind of we'll get an idea of your overall experience in the market. And, I guess naturally the first question is, how did you get started? What made you interested in the market and kind of where did it start?
Yeah, growing up as a kid, just to put a date on myself, I was born in 1967. Growing up as a kid, though, when I was, maybe a junior in high school or probably elementary school, my dad was always watch Wall Street Week with Louis Rukeyser, not Louis Lukeyser. Anyways, and I would just hang out every Friday night with him and kind of, just pick up stuff a little bit. I'd start asking questions now and then. And then, during the silver, when the Hunt brothers tried to corner silver, when they did corner for a little while, I got interested in silver and we bought some of that and it actually made some money. And then the first stock was, I think I was in high school, maybe junior high. And I had saved some money up from caddying and, being a busboy and newspaper route and all those, little odd jobs you do when you're a kid. And I had seen a report about a company called LoJack, which makes the vehicle recovery, tracking, which was super high tech back then. And they had a report on the news that, the local news, that I lived outside of Boston, which at the time was a car theft capital of the world. So they were going to donate the trackers to the state police. Anyways, I said to my dad, "Hey, the stock's $5. Can I buy some with my $500 I have saved up?" So he said, "I'll do you a little better. We'll buy 1,000 shares. You put up $500. If it goes down, you lose your money, but you can make the profits." So little did I know I was getting 10-to-1 leverage. And anyways, the stock never looked back from $5. And about 3-4 months later, it was $10. And I said, "Hey, Dad, let's sell it." So he said, "Sure." And, I made $5,000 off of my $500 investment. It was pretty much needle in the arm since then.
Nice. Okay. So that's an awesome story to start with. Did you ever have, getting into it, did you ever have times where you ever had an account blown, or was it kind of you started with a cushion and then from there you were just kind of risk averse with it, or how? Because I know I've blown up a couple, and so I'm just curious, your take on that.
An equities account I did blow up in 1990. The summer of 1990, we had a pretty good bear market. I had just opened my own day trading office downtown, right across from Union Station. There was this bar there called Redfish that we used to go to all the time, which was right across the street. But anyways, that one, it was really strange. It was the first time I had really experienced this, this day after day. I felt like I just couldn't do anything right. And it was almost a relief when I did finally run out of buying power in the account. It was the strangest thing. It was just so nice to get it over with. And then of course I had to deal with the fact that I had blown my account up and, you know, come back little pieces at a time. Fortunately, I had access to a lot of leverage back then, and I didn't have to put a lot of money up to do it. The brokerage firm I used, they would give us pretty much unlimited buying power overnight. They would charge us $1 per thousand that you used overnight. It was had
Wow.
to be highly illegal. Um, but if you wanted to use $100,000 of their buying power, it would cost you $100 for overnight, and it was very inexpensive for intraday. So I have blown up. I've done it actually in a futures account as well, and yeah, it sucks.
It's never fun. But at the same time, I think, at least for me, and I feel like a lot of traders have the same personality, you could tell somebody something a million times, but until they actually feel the pain of actually blowing the account, and not a paper account, feeling the pain of, wow, I just worked for that money and it's gone.
Right.
I think that's something that almost you have to feel in order to know not to do it again. What
Not
do you
only
think
just
about that?
blowing up an account, Jake, but also just paper trading in general doesn't really teach you much. There's a phrase that when you commit your capital, you could like it or not, you commit your emotions as well. And it is there. But if you don't, if you're trading a paper account, there's no connection to it. It's just a game,
Yep.
and trading isn't a game. A lot of people treat it as such, but it's a business, and you have to have a plan and a backup plan.
Yep. Yep. And I think, I think a lot of people think that technical analysis and some of these ways of looking at the markets can be beneficial, but if you don't have a handle on your emotions or have any type of plan, you could have the best technical chart in the world, but if you just apply the wrong kind of emotion, it's very easy to get caught up in it, whether that's the position is too big, whether that's you're on a ton of margin and you can't really think about it and apply the plan right. So I think that's just such a big important thing about it is, like you said, paper trading's great, but when you lose $10,000 of fake money, you don't feel it like real money, or even $100. I mean,
No, exactly.
whatever type of account you're trading, it's never fun to lose money, but you feel it pretty quickly.
Yeah, it's always relative, and people will say, well, how many shares did you have? How many shares I have is irrelevant to what you are doing personally. It's not about, my trading. When I talk to people about trades, or it's not about how much money I made on a trade. If I suggest a stock, on Twitter, I'd put up this BNTX last week, and, it had a great run. It doesn't really look like a lot there. But if you look at, for instance, on a 10-minute time frame, it was 54 and a half when I put it on, which was
Nice.
right in this area here. And, in 2 days, and that was Thursday, and it went up to 62. And someone's like, well, how many shares do you have? And what difference does it make to your account? You're not, you're not getting a piece of my profits. So who cares? Think about yourself and your financial position is where I think a lot of people really need to get more comfortable with, rather than worrying about what everyone else is doing.
100%. I remember back when I had a subscription, people were asking me, well, how many shares do you have? And looking back now, they were asking that because they were figuring out how many shares they needed. And, the amount of shares I had was X amount of the account, but that shares to their account was maybe 100% plus some leverage or something. And it's
Right.
just, you can't, like you said, you can't compare your shares or your position size to someone else's, because one, you have different personality, there's so many variables at play. You have to stick to your plan, and I think that's really important. So thank you for mentioning that. I know you started messing with the anchored VWAP. What year was it where you really started to dive into that?
I think I first noticed it probably in about '04. I think I was using a system called Realtic, which has gone. I think they're still around in one form or another, but they had something on there called VWAP, and I looked at it, and it was a trend line that you would draw. So let's say I wanted to draw it on here. I would start it like at this candle, let's say, and I would draw my trend line straight across. but the line would go up and down based on where the volume weighted average price was. So it would draw a horizontal line. I would draw it straight across, but it would go higher, underneath a rising stock. And I noticed as I pulled it over, a lot of times it was, catching a bid at that level when I started from the beginning of the day or whatever, session. So I started looking at it that way. And then they had a VWAP study, which was basically just, VWAP for the day. And I could put that on an intraday chart, let's say a 30-minute chart. And whatever day I started it on, so I kind of figured out a hack, in other words, where it was for one day. But if I started the chart 5 days ago, I would have a 5-day volume weighted average price. So I started doing things like saying, well, the low was 12 days ago, so I'll start my chart from 12 days ago. And I started to see how the volume weighted average price off that most recent low, often acted as support in the next 12 days as the stock continued to rally. So really where it first became easy to use was with TC2000. They had asked me, I had been using their software, and I asked them to put it on there, and they had, as a point and click indicator, and they did that about 6 years ago. And now, as we know on TrendSpider, if I want to know, for instance, what I'll look at in a stock like BNTX is put a volume weighted average price off of this peak, and you can see this is part of why I bought where I did right in here, because it was above the volume weighted average price from that peak. So to me, it's about supply and demand. The sellers were taking profits. As long as this volume weighted average price was declining, it says they were taking profits. And then, if I take a look at the volume weighted average price from this low, you can see it kind of comes together in there. So as those flatten out and prices move above it, it tells me the buyers are regaining control. That tells me now I have a point where I want to enter with a stop underneath the most recent relevant high or low for that time frame.
Got it. So would you say that one of your strategies with anchored VWAP is actually looking at when the price is breaking on a flat VWAP, or is there a kind of like in blackjack, is there a specific setup that is just like, man, this is money? Like, would you rather have it flat, or would you rather have it increasing with price breaking through it?
Well, as far as a breakout goes, if you look on the screen right now, what I just did is I went over the daily time frame. And on this BNTX, you can see we had a move that really began right here on March 16th. So, the stock found it was declining all in here, and then it started finding buyers there the last three, or Monday, Tuesday, and Wednesday of last week. So it was now holding that level as support after having resistance a couple times. We then had a rising 50-day moving average, and one of their competitors, VIR, pretty much had the same exact chart a couple days before. Now, so this stock went on Wednesday. BNTX started rallying on Thursday. BNTX is holding its gains. We don't want to see it do this, obviously. This is the VIR. But on BNTX, it's showing relative strength. So to answer your question, Jake, what it tells me is that if it's declining, it says that the average price since that event is still declining and there's money flowing out. But if instead I see the average price, from the lows as well, is increasing, then we have, and that's where, this isn't a great example of it, but that's where we start to see what I call the pinch. So we start to see that the buyers are becoming more aggressive from the bottom up, because that volume weighted average price is advancing and this price is coming down and flattening out. Now we've kind of got that fulcrum point. We've got if you think of like a teeter-totter who's in control and it pops up, well, the buyers are in control. Well, you have to remember, it's not just the breakout. We have to have a plan after that. If the person on the other side of the teeter-totter jumps off, it's going to pop right back down. That's why we use stop losses. So I do like to see if I'm looking to buy a stock above a volume weighted average price, I want to see that flat to advancing is generally what I look for.
Makes sense. And one thing you taught me pretty early on, and these why do you call these levels of interest rather than support or resistance?
Simply because the term support and resistance is so heavily used by people. They say, hey, the stock is at resistance, or it's at support, or, it's got support just below here. We don't know support or resistance until after the fact. It's a potential level of support. So I call it a level of interest that we want to be aware of because it has the potential to become support. It sounds, like I'm splitting hairs here, but it really, to me, makes a difference because we only know after the fact. And if you tell yourself that it's a potential level of support, it makes it more likely that you're not going to hold, as it breaks down through it, because you've told yourself, hey, it's support. I'm just going to hold a little bit longer here. Instead, it's a level of interest. So what I want to do is I don't want to buy at support. This is me personally. Some people will buy at the 50-day moving average. I look at the 50-day moving average and say a stock pulled back to the rising 50-day moving average. It's at a potential level of support. Let's look at it on a shorter time frame to see if there's evidence the buyers are gaining control. So for instance, if we look at the SPY, and I'll go in here and, there's a 50-day moving average. We can put the 200-day moving average on there as well. And of course, people are looking at it saying, hey, the 200-day moving average, that's a level of support. And some people bought on Thursday and said, hey, look, see, it worked. But if you go down instead to a 65-minute chart, and then you look at it and you say there was no real support there. That was just an area of interest. So we look for the evidence that the buyers are actually gaining control. And the way that I do that, on that time frame, or actually on a 30-minute time frame, I'll use the 65 period moving average, which now is a 5-day moving average. So if that 5-day, the orange line, is declining, then I don't want to be a buyer. I want to see that flat to advancing before I trust a rally, and then I want to see the stock get above this level of consolidation, between 312, or 313 and 314 and 315. Doing that would tell me it made it through that level. And people said, well, this was support. We don't know if it's support until it's tested and bounced higher. So I call it a level of interest.
I remember.
You're on mute.
Oopsies. I remember catching myself because I used to say, oh, yeah, this is support below. And then, I completely forgot that, like Brian says, it's not support until after the fact. So that's something that really helped me is saying level of interest, because we have a lot of people ask, oh, is that anchored VWAP support below? And it's like, one, we can't tell you anything because we're just a software, but it's a level of interest, if anything. That's what we can tell you.
It's a level of interest that has the potential to become support, because often it does. So therefore, we want to be aware and look at it and see if the market says it is support.
Yep. Love it. Well, that is awesome as far as experience goes. We have a much better idea of kind of where you started, and it's cool because I kind of started at an early age too, not necessarily because I had any interest. And it was funny. My dad actually hated the stock market, and he still hates the stock market. But he got me in it. He wanted me to put some money into something I thought would grow. And if I would have stayed to those rules or stayed to that kind of mindset, I'd probably have a decent chunk of money right now. But I blew up that account pretty quickly. So, however, that is what kind of helped me learn early on to kind of respect these types of things. Not get too confident, not just absolutely go into something because of emotion. And then charts are really what helped me kind of visualize that better, because I really didn't start looking at charts until later on. It was always the line chart. I was just looking at the overall trend. That was all I was looking at. So, just before we jump into the mindset, was your kind of aha moment, was that from the anchored VWAP? Is that when things really started to make sense? and then you kind of changed your strategy once that was implemented on different platforms? Or, do you think you really had a kind of a good handle on things before that, and the anchored VWAP kind of just helped put it all together?
So as far as trading, the aha moment, I think really came. So my background was I moved out to Denver in 1991 from the East Coast, and then I worked as a retail stockbroker. Worked in Boston as a broker for a while. Moved out to Denver and began working as a broker here. And I didn't really enjoy being a broker. It's a glorified telemarketing position is really the way I looked at it. My interest was in the market, and I didn't know another way to get involved in trading. I didn't have the highest GPA, and I wasn't the most disciplined person as a student, but a brokerage position got my foot in the door. From there, as a broker for a couple of years, I didn't intend it this way, but it was great experience for me because I got to practice with other people's money without, really a lot of personal consequence. It sounds evil, but you look at a 22-year-old stockbroker. Why would you listen to a 22-year-old stockbroker? What the hell do they know about anything? So again, I got to practice with other people's money. I made a lot of mistakes. We also, we're in a good market and made money. But so I had transitioned into from brokerage to trading through a company called Generic Trading. It was they used to advertise in the back of the Investor's Business Daily and say, put $25,000 down, we'll give you 20-to-1 leverage. I was like, that's great. I can buy $500,000 worth of stock. This is fantastic. So I scraped together 25 grand, used some money for, on a credit card, which shouldn't, I wouldn't recommend to anyone, but it worked for me. It did. I scraped together, and for the last bit, I used credit card cash advance, one of those checks. And so from day one of trading, as a full-time trader, I made money. I think 14 months in a row. I hated to lose money. It was my only source of income. I had just had my first son. He had just been born, and it was just the worst risk reward in terms of what people will tell you to do. Here I am, young. I've just purchased a house. I've got, no other source of income other than trading, and just had a son born. So I was hugely, fortunately, I couldn't afford to lose, but that mindset didn't paralyze me, but it did allow me to be very defensive and make sure that I didn't allow losers to overwhelm me. I would cut them at the end of every single day. If it was a losing position, I was just done with it.
Makes sense.
That saved, that's what kept me in. And that's what's always kept me in. So if people say, what's your, what do you do wrong in the market? It's probably I sell too soon on my winners, but at the same time, it's also what's helped me, stay in the market because I don't get big gap downs often, and I position size properly.
Got it. So, the experience definitely makes a trader, but I think the mindset, as we talked a little bit about as well, is crucial. So, we talked a little bit about this with plans and stuff, but how do you remove impulsiveness from your trading? I mean, everyone has to have some level of impulse in order to, have conviction to press buy or sell. How do you control that impulse to, keep it within your plan and not kind of get so emotional where you're just like, you let your emotions completely deviate from what you were planning on doing?
Yeah, that's a great question because I used to be a pretty emotional, reactive type trader at times, impulsive. One thing that I recognized I was doing was I would have the television on and I would hear something on television, and being bored because I wasn't in a position, I'd be like, well, I'm a trader, I should trade that. And so I realized, well, I've got to turn CNBC off, not because I hate their content, but because I can't handle it. Basically, it makes me impulsive. I think that you've got to look at, is Twitter helping you or hurting you? Do you look at things impulsively? So for me, I have a tendency, I think, to act impulsively. So if you notice, like during the day, I'm not really very active on Twitter because I just don't want to see what other people are talking about. I don't want their opinions to cloud mine. I just want to look at price action because that's where the truth is. Everything else is just noise. So those are two things that I do currently. And I think perhaps the most important thing and the easiest thing that people can do is one, identify your time frame and stick to that time frame. If you're not a day trader, then you shouldn't be, just impulsively buying and selling things that move or because you heard something. So have a plan for whatever your time frame is. My preferred time frame is swing trades. I do some day trades as well, but my preferred time frame is swing trading. So each day I've got a list of stocks, and I go through that list, and then I narrow it down, and then I make it into notes that look like this, and those are my main ideas for trading tomorrow. And I'll set a lot of alerts. So if I think, for instance, a stock is a buy at $23, and it's 22.50, I'll set an alert at 22.90 because I want to see as the stock is getting up towards that level that I want to purchase at because it's breaking an important level. I want to start to familiarize myself with it. So it's about having a plan and then anticipating the action as it gets close to the action point. And then once you're involved, I like to take a little bit off if it makes a quick run, just to reduce my overall risk, and then to manage risk is the main thing. People say that the winners take care of themselves, which isn't true. That you have to manage your winners just like you manage your losers.
Absolutely. We talked a little bit about this, but are there any other mistakes that you find yourself still making? I mean, you mentioned that you may sell too early, but are there like any? I would say that's a problem that I could deal with. If I'm selling profit too early, I'll take it. Is there any mistakes that you still make? Whether that's, maybe anchoring the VWAP from the wrong spot, or obviously I don't think that's an issue, but like something like that where you maybe apply bias to an anchor that you may not usually do or anything like that.
No, I think that what's happening now in particular is that everything we hear about the economy and about COVID tells us why on earth would the market rally?
Mm-hmm.
And yet we had a 30+% rally off the March lows. So, and all the way up, the news just got worse. The unemployment numbers were record historic highs. They continue to be terrible. Business closings, more infections, and all of that. Everything you see there, pretty much tells you, wow, the market's wrong, right? So it shouldn't be going up. So I'm going to sell short. And that's where and why I always say only price pays. Because if you start thinking about that bad news, you're going to be so paralyzed that you're not going to want to buy, even though everything in front of you is going higher and it's breaking from nice tight consolidations, giving us great risk reward trades. In the back of your mind, you might have something telling you, but it's bad. We're in this, we're going to be in the Great Depression or whatever it is. So separating what you believe or what you hear in the mainstream from what price is telling you, it's okay to be aware of the backdrop of what's happening, but don't let it get in the way of making the decisions that the market is telling you if you're interpreting it correctly. And if you're interpreting it correctly, it should start to move soon after you get involved. And if the market says, hey, you're wrong, it starts to go down, don't fight the market. Instead, look at it and say, okay, I'm going to, stop myself out, reassess, and see what I did wrong, or maybe there's a better opportunity. Maybe it just didn't work, and that's fine. That's trading. No one wins all the time. No one should shoot for winning all the time. It's just an unobtainable obsession.
Yep. No, 100%. I mean, and that's the thing too, is you can have a 50-50 record and you can still win if you know how to take your losses the right way. And, I think that's something that a lot of people think that in order to be a successful trader, you have to get every single trade right. And it's, if you know, I always bring up poker and casinos, but it's the same thing. You don't see a poker player winning every hand. It's how they manage their bankroll and how they kind of are able to snap back from the losses. It's not that winning. For me, the more times I've got trades wins in a row, the bigger the losses at the end of that road, because you let your ego get into the way. You think that all of a sudden you can't lose. And so sometimes for me, when I get on a hot streak, I sometimes just turn off the computer because I know the big one's coming if I don't stick to my plan. So and my next question was going to be how you deal with fear in the market, but it seems like you really just kind of try to eliminate information overload and stick to what the chart is telling us. And the chart isn't always going to tell us exactly what's going to happen, but it tells a much better story than what the media does. And sometimes there's a massive lag in the market versus what's actually going on, right?
Sure. And in terms of, fear, I think that there's certain times where I might look at a stock and say, the market's starting to show some signs of fatigue here. It's not broken by any means. I mean, look at this S&P 500 right on the 50 and 200-day moving average. So to me, the market, a lot of people are expecting this market to break down. I'm not expecting that, but I get my bias from the intermediate term time frame, which says we're below that declining 5-day moving. Be a little bit extra cautious. So when I have mixed messages from different time frames, that tells me don't be scared, but still participate because things are working on the long side still, and we're starting to see some of the short setups, following through a little bit at least. So instead of not being involved, just being involved on a smaller basis. So if my normal risk unit is, let's say, $500, maybe I'll cut that to $250 or $200, or based on the personality of the stock. If I'm going to trade some crazy little biotech stock versus a stock that's maybe more establishing trades with cleaner patterns, I'm not going to risk the same amount of dollars on those trades.
Makes complete sense. And this kind of takes us into the process part of this whole interview or just chat. Do you trade the same stocks over and over again? Do you you mentioned personality of a stock. Do you have a certain stock that, I don't want to say a certain stock, but a certain kind of personality? Do you look for, obviously if you find a stock in a scan and you're like, oh, this looks amazing. And then you go, maybe you're trading options and you look the spread, the bid is 40 cents and the ask is 95 cents. Do you try to stick with the same stocks that and understand to kind of maybe not put yourself in this position where you're like, holy shit, the spread is 50% at this point type of thing?
Right. I don't trade the same stocks over and over again. I do have kind of a core stable of maybe 100 that I'll pay more attention to. But I look at a lot of stocks and I come up with some funky names that, are just, sometimes I don't even know what they do, but I'll see that it's a small biotech stock, and I see what's going on with the personality of the market, that Robinhood traders are pushing these stocks to insane levels, that I want to be involved in some of those. So it depends on the environment that we're in, the personality of the stock, and in my mindset. If I didn't get a good night's sleep the night before, maybe I just won't. I'll be less likely to trade more aggressively.
Yep. So awesome. That is great information. As far as when we talk about the personality of the stock, right? Let's say that we went to the casino and we wanted to go play at the poker table. The personality of that table can be a function of whoever's moving, whoever's owning that table, who's got all the money. Do you think personality, the stock, the personality of the stock comes from who's making the market? Do you think it's just based on the type of participants in that stock that make the personality? What exactly is making the personality of a stock?
I think that it's the participants and when they get involved and the type of stock that it is. If you look at some of these little biotech stocks that, so some people have been talking to me about this IBIO a lot lately. And if you just look at the personality of the stock, what I mean by that is it has a history of these big spikes and then just they get the shit kicked out of them. Big spike and the same thing over and over again. So I'll look back to a longer term time frame and say, what's the personality of this stock? And I look at it, especially on these little biotechs, and say, this thing is schizo. That it's not the type of thing that I would want to put a lot of money, commit money to, and hold on, because it has all these false moves and then they fail very quickly. So, versus, I think ABCT is one maybe that, you look at the personality here, and what is the personality of the stock? Well, look at the ranges and look at how, this one's just all over the place versus a, big institutional stock like Microsoft, which is it's steadier, it flows. It has its moments where it's insane, but that's when the market is insane. But generally, look at how smooth, it trades. So the stocks that I'm typically attracted to are not the not the micro caps, number one, and not the macro caps, but I'm more kind of middle. I look for a 20-day moving average of volume of at least 500,000 shares. And maybe 450, I'll sneak it in there. And then generally up to about 2 million shares seems to, per day seems to be my sweet spot. Price wise, I think my sweet spot is probably 10 to 50. And, they're not ADRs. I'm not good with commodity related stocks. I don't like gold. I don't like, for instance, GLD. I don't like to trade GLD because it's a 24-hour market. And what that means is you're going to have gaps every single day. And I can't control my risk as well. So you've got the supply and demand for gold itself. You've got monetary policies to worry about. You've got the supply and demand for the stocks, the individual gold stocks. And then are these gold companies hedged? And it's going to affect their profitability. So it's not going to move in tandem with gold. So there's too many variables. I like just a good, clean growth stock, basically, without all those, different variables. Oil related, airlines, they drive me nuts. And more than drive me nuts, historically, I just haven't made money in those stocks. So why would I want to continue to prove I'm smarter than them rather than just say, hey, here's an area where I can go that treats me well. I'm going to go there. I'm not going to go back to the abusive relationship with these commodity related stocks. I don't need to get hit.
I remember every time we've met up, I'm either trading something that's commodity related or something that you're like, yeah, I don't really trade that. I'm like, yeah, maybe I should look at something else. But it's the truth. I mean, I think like GLD is a great example. I tried to trade that over the last few months. I didn't trade a big position or anything. I was only in options, but I didn't fully understand. And like you said, there's so many variables at play. It's not just like you read a news article and that's likely moving the market. There's a million things, especially commodity related or something that's internationally traded, that you have to be able to look at. And you may not even have the sources of information to get any type of edge trading that.
Yeah. So it's personality. It doesn't suit my personality. I always tell people, just because, and I'll tell my Alpha Trend subscribers, listen, here's a good looking gold stock. It's got a great setup. It's, it's breaking resistance. It's pulled back, and now it's, gives us a 30-cent risk. I'm not going to trade it, but I'm sharing it with you because maybe it suits your personality. Yep. I'll bring subscribers $2 ideas and $200 ideas. I'm not going to trade them all, but it's about bringing the opportunity to the person so they can say, hey, that one resonates with me personally. I love trading gold stocks. My grandpa used to talk about it, and that's how our family fortune was made, or whatever the case may be. It's about knowing yourself. People spend too much time saying, well, Brian, how did you do in that stock? Well, who cares how I did in it? Going back to that, it's just, what did you do with the idea? Does it make sense to you? I might not have even traded. I miss a lot of great trades that I put on Twitter, and I'll say, hey, look at this stock, and then I'll go back a week later and go, that was up 20%, and I didn't own a single share. And it's, you miss some, and that's the way trading is.
Yep, 100%. I mean, if you try to catch every single winner, then you're going to become so overwhelmed that you may not even do the right. If you got 20 different stocks and they're all winners, you know, it's hard to take advantage of all those at the same time unless you've got some type of automated trading system going on.
Yeah.
So I completely get it. This is for some of the people watching, maybe who are newer traders, and maybe we could empathize a little bit with this. But let's say that you're trading, but you just keep failing. Whether that's because of your personality, just not really meshing with your style. Maybe that's you need to learn a little more about charts. For those that are kind of failing, what would you say kind of to keep them going? What kind of mindset should they implement?
Slow way down, trade, trade 100 shares, trade 50 shares, trade 12 shares, still be engaged, but realize that you've got to learn from these losers. If you're not learning from your losers, then you're never going to develop as a trader. So be aware of what mistakes you're making, try to correct them, and don't revenge trade and try to get it back all at once. Instead, slow things down, build your confidence, then start building it back up a little bit at a time.
I love that. And position sizing. I mean, some people, if you're on a hot streak, maybe you increase your position size a little bit, or maybe you don't because you're on a hot streak. Or,
Right.
if if you're kind of just having trouble, like Brian said, you don't need trading is all about mindset, right? So if you go into a trade and you make 20%, it doesn't matter if you made 20% on $50 or $1,000. It's about the process, and that being able to replicate that process, whether it's a $50 position or a $1,000 position, kind of being able to understand what works for you. Like Brian's mentioned multiple times, it doesn't matter what Brian's doing. Brian has a completely different experience level and mindset on trading compared to maybe 95% of the other people out there. So being able to just stick to your plan. If the plan's not working, realize that. And I think I saw a couple of things in the chat already, but your losses should really be your tuition. It's not like you go to college for trading. I remember I talked to my professors. They had no idea what I was talking about most of the time. And there's not a course a lot of the time for trading unless you want to become certified like a CMT or something. So your tuition is your losses. That's how you pay essentially for your education in this market, is by your losses. And if you're able to learn from your losses, it's not a loss, in my opinion. It's just a way to learn for next time.
Right. Yep.
So last question I have before we jump into some chart requests, and maybe you can explain some of these new features as far as why timing is important with the anchored VWAP. Why would we anchor from the month to date, year to date? But before we jump into that, last question I have for you. I think you already answered it, but what is harder, buying or selling? And when you are selling, are you using parameters such as a profit target as far as a percentage gain? Are you using a signal that says, okay, I'm out? What is the kind of the function of your profit?
Well, I think that the thing that I excel at is buying at the correct time.
Okay.
So that's kind of my talent in a way. And so because of that, when I go into a trade, I go in a little bit heavier than maybe is prudent right away. But I do that for a specific reason. That is because when I get into a trade and it starts to move, I don't care what where it finally goes. But when I get involved, say for instance, here's a stock that I was involved in last week and still have a little bit of a position. And this was, I got involved at $5.43. The very first day, well, actually, I was going to sell some up about 40 or 50 cents. The next day it gapped up, so I sold a third of it up 60 cents. I didn't care where it was going. I was just reducing my initial risk, saying that now I have a little bit of a comfort level, and if I put my stop to break even on the balance, I'm still going to be an overall winner in this trade. So it's about immediate risk reduction and being in the stock from a position of strength. Then I will sell more, as it maybe breaks to a new high. And then I'll start to raise my stops underneath the successive higher lows. So, for instance, the final third that I have on this stock is right now at $6.45 per share. And I'm hopefully, and part of me kind of feels dumb because it was at 780 and here's my stop at 645. But that's what I chose. So I'm sticking with it. And maybe, hopefully this is the end of this pullback and then it goes on to 10. But you never will hold a stock to 10 unless you can experience some pullback. So if I sell, if I'm out of 2/3, I've got a very nice position in it. And if I get stopped out at 645, I still lock in $1 or $2 on that balance. That's still a winning trade. So it's not about woulda, shoulda, coulda. It's about what can I do to make sure I hold at least some to be a big winner.
So scaling in and out is huge for you.
Scaling out, not really scaling in. I generally get in all at once. Like I said, that's what I consider to be my strength, is identifying the proper point to get in.
Okay.
And then scaling out is more. Although with plug, if it continues to hold up well, and I think it might need maybe a day or two further of consolidation, I might add a little bit to it and then put my stop on the balance, on the entire position at that 645. So once I feel that the pullback has exhausted and it begins to move higher again, then I might add to it for hopefully another leg higher.
Okay. And last question, would you rather add on strength or weakness?
Strength.
Okay.
Well, so actually, let me say this. On strength after a period of weakness.
Okay.
So for instance, this is the period of weakness. I'm not going to buy weakness. I'm going to buy strength as it moves away from here. Right now, over the last day and a half, we have a lower high and a lower low. Once it starts to flatten out, it makes a higher low and then a higher high. I'll add on the strength after the weakness.
Got it. Okay. Makes complete sense. Well, I mean, I learn something new every time we chat, and this has been great just from learning your experience. I didn't even know that you got in the market from your dad too. So that's cool.
Yeah.
But let's go into segment 2. And segment 2 is going to be a little bit of everything, right? What I'm hoping we can do is maybe go through some different chart requests, but apply some of these newer anchored VWAP features. And maybe you can
these are cool.
Maybe discuss a little bit about the anchored VWAP ribbon. I still remember us sitting at Max Gill Grill and you telling me about this, and me saying, oh, well, I think Russ can add this, I hope. So, can you go through a little bit about the anchored VWAP ribbon, what exactly it's telling us? And then, I'll just give you a couple different chart requests that we have, and maybe we can make a case study out of just those. The first one is Disney. Disney is been a very interesting one the last couple months. I
have some old VWAPs on here.
Beautiful.
So I had this gap, I had that low and that high, and then as it broke down here, it told me it was pretty much dead. But let's remove all those, and let's do this, Jake. Just to show that some of your new features. One, I think it's very cool that newer people say, how do you know where to anchor from? And significant highs, lows, year to date, month to date are some of my go-tos. But what you guys just did here, and I hope I get these right because they were just added today, and I'll do it the way Dan did. We'll add 4 of them, and the first one we'll say is from the highest high. Then we'll go from the lowest low, and then we will do a month to date, and then a year to date. And so these are great places to start, and then they will show. So that pink one is our year to date, I think. Looks like January 1st.
Yep.
So we just broke back below that. And look how it was resistance to the penny there, pretty much support to the penny here. Then we came up to the VWAP from the peak and the month to date, found resistance at those, and now we're breaking back down. So I would just add one down here manually and say, if what I would expect on Disney, if you're looking for a bearish case, would be that maybe it comes down slightly through that, rallies up, makes a lower high, and then the next break of that one would be the test. But the first one probably won't fail, because look at how well it held its support in here these few times. Most likely, because we've had a strong drop, that it in that general area, we could turn on the sensitivity bands. In that general area. So if we go to properties here, and we could say a percentage band, and put these, just what you have on there, these Fibonacci's. So somewhere in that general area, I think it's most likely to bounce first and then come up into this 112.13, make a lower high, then break down. And it wouldn't be surprising to me to see Disney retest its lows.
Well, that's the thing with news, right? It's like what's priced in, what's not. You got I feel like there's a lot of retail traders trading this that kind of do look at the news. Do you think there's ever a time where if you're trading a stock, it's important to look at the news because that's what's making the market for that particular stock? Or are you just simply looking at price action?
No, I always want to be aware of what's shaping the psychology in the trade. So I want to know when earnings are due. I'm generally not going to hold through earnings. I want to know if the jobs report is coming, unemployment numbers are coming out. I want to be aware of what are the potential catalysts, and use that not because I want to place my bets on whether I believe Disney's going to host the NBA or not. I want to know that this is shaping the psychology. And if 12 NBA players, test positive, it's likely that Disney's not going to host it, the NBA coming back, and maybe that will help propel the bearish scenario. So I have to know what's shaping the psychology, but I don't want to form my opinion about it unless rather the price action backs up what the opinion says it should be.
Got it.
I'll view that as a bonus, in other words.
So this is a question I had when the first time I saw your presentation was at the Chart Summit, and I was like, what the hell is the Anchored VWAP, and why do we care about year to date? What is the logic behind some of these dates?
Year to date's a pretty easy one. If you think about how portfolio managers get paid, think about hedge funds. Hedge funds, their slate is brand new at the beginning of the year, unless they had a holdover loss. But if they were profitable last year, the way they're going to get paid this year is performance, based on year to date. The way a gold fund manager will keep his job at the end of the year is how well did he do based on his benchmark. If GDX is his benchmark, GDX is up 32% this year, and he outperforms and does 40%, well, compared to the beginning of the year, he outperformed. It's probably going to bring in more assets, therefore he's going to get a big bonus. If instead he's up 18%, well, he failed, basically. Most likely he's going to lose his job. So they're trying to at least beat that benchmark. So they're going to place programs around that level. They're going to say, I want to own GDX or whatever their stock is. It's IBM, it's Roku, whatever. I'm going to buy that stock as long as it's on my company's buy list. I want to buy it in this area. So month to date, quarter to date, a lot of, for instance, some of the big institutional managers, they have quarterly decisions or even monthly decisions where they say, we're going to buy this SPY, or the market, as long as it's above its month to date volume weighted average price. And if you look at SPY and you look at, the month to date, we're below right now, but we're holding on last month's volume weighted average price, which is interesting. So you're going to see that these levels are based around programs. It happens on the daily charts. It happens on the weekly charts. The question is, which ones are important for your time frame? is the SPY year-to-date volume weighted average price important right now? It's not. It's way down here at 286. That's not anything to do with my time frame, most likely. It's possible that this leg could lead down to that, but I want to know instead, what are some of the other levels, like the volume weighted average price from May 1st, that oh, that's why. Or from this gap, for instance, we can put one there. That looks like an important level to know.
Yep.
And that is I think that's the May. No, it's not. Anyways, I want to be aware of from gaps, levels where the psychology changed, from the highs and lows. Who's in control from this high? Are the sellers coming in, putting further pressure on it? Are they supporting it from the volume weighted average price from the low? Well, not yet. Then we start to layer the volume weighted average price levels and see where, this volume weighted average price gets hit here. We add that one gets hit. So we add that blue one there. And that hasn't been as important right now, but often it is. So there's definitely an art to where to add your volume weighted average price levels. But for the people who aren't familiar with that yet, what you guys have done is add them to these recent highs and lows and year to date like that. It makes it so much easier, because that is the psychology of what drives programs.
Do you think that this is kind of a crazy question, but I'm going to ask it. Do you think the volume weighted average price, at least in this day and age, is it being respected because of natural supply and demand, or is it being respected because so many people are using this now?
I think it's a combination. I think that a lot of technical analysis, it's similar to why do we have a 50-day moving average on our chart? Because people told us we should have a 50-day moving average on our chart. And oftentimes the 50-day moving average will act as support because there's so many people looking at it, putting new money to work there, covering shorts there, and that sort of thing, that it becomes a self-fulfilling prophecy. Now, if we were to think about the logic of the 50-day moving average, it doesn't even make any sense. What we should be doing is using a 63-day moving average, because there's 63 days, there's 252 days in a trading year. So divide that by 4, we have 63. Divided by 4 is important because that's a quarter. Companies report earnings every 3 months. So wouldn't the 62-day moving average be more, or 63 be more important than 50? But instead, the market has chosen 50. So fine, we want to be aware of that the market values that. And so I think that, Jake, there's a combination that, one, the institutions started to do week to date volume weighted average price level. Well, they started out as a daily. Okay. So in 1988, this is when we first, when the volume weighted average price was first introduced as a benchmark for execution. It was 1998, 88 rather. And then we had, people starting to program machines saying, I want to buy around that volume weighted average price. They did on a daily basis. Then they started going out to 3 days, 5 days. If we go back to, what Warren Buffett sold his airlines for, he sold them over a course of 2 days. And I posted this chart before on Twitter. And the reported price was the volume weighted average price of those 2 days. So Warren Buffett uses it for his execution, is my point. Over a 2-day period of executing, he said, okay, guarantee me the VWAP and sell 12 million shares or 23 million shares, whatever it is he's selling. So there's now, it used to be this institutional benchmark for entering orders and, for buying large positions, so that they could, not disrupt the market, and spread their orders throughout the course of the day, of a week or whatever, to compare how well they do, versus that benchmark. But now there's so many people using the volume weighted average price as an analysis tool instead of an order execution benchmark, that it tends to have a little bit of a self-fulfilling prophecy as well.
Love it.
That's a long answer, but I think it's a combination of the two.
Yeah.
The chicken or the egg?
I see it all the time. And before we move on to the next one, actually, let's move on to the next one. Next one is Boeing. But
Okay.
do you mind? So, you are kind of, as I mentioned, my mentor with this stuff, and the whole kind of passing the baton type of approach, right? Where you anchor initially from capitulation, then the next touch is that. Is that something that, you do based on the chart? Because like if we do it from Boeing, right, we don't have that really pretty kind of touch and go like we had on SPY. So is it dependent on the chart that you're looking at and kind of based on how it's respecting it? Or are you always using that type of someone said passing the baton on Twitter and it's like stuck, but kind of.
Yeah. No, I like that. So for instance, when we anchor from this low, you can see it was really sloppy around there.
Yep.
Versus the SPY, it was pretty clean. That right away, from that low, it told us that this is where buyers were defending it. Once it didn't break down from here, the chances of a retest of the lows were pretty much off the table at that point. So, but on Boeing looked like, well, it broke below that volume weighted average price from here. I would have expected it to probably retest. Now, I wouldn't have shorted in here because it had already dropped from 185 to 124. Then you saw that it really didn't have a whole lot of value as prices moved above and below. Now what we see, though, is from this low, that was respected once, twice, hit here, now it's below it. So perhaps coming down to the VWAP from the low looks a lot more important. The question is it now going to be, will it be a level, it's a level of interest. Will it in fact become support? And then we can say, well, adding the volume at price in there as well. No, I have it in here. Wait, I thought I don't see it.
It's on the so if you go to indicator and go volume by price, you'll be able to add it.
Oh, I thought I had it in there. Okay. I thought I was lost in that list.
It's easy to do.
Come on.
There it is, kind of middle down, right under volume lower.
Yeah. There you go. Okay. So now we look at that and say, that looks like the 140 looks like the more important level if it does break that. But here you can see and here's a great example of using the VWAP from the highest high. Look at how it came right up to that. That is not a coincidence. You just can't make that up. That's where this rally halted, and then it dropped in 4 days directly onto that year-to-date volume weighted average price. So here's a great example of your automatic volume weighted average price tools. This is why you want to be aware of from the highest high and the year-to-date. That was a perfect, move down in there. So I think Boeing is likely to come test the volume weighted average price from the low. There's a big volume area in there, and maybe it can start to stabilize. The thing about Boeing is, I look at this stock and I see so many people thinking that they caught the low. If you look back historically at any type of stock that experiences a large drop like this, the phrase that comes to mind for me is, if they don't scare you out, they'll often wear you out. And it's like bouncing a ball from the 20th floor. The first time it bounces up to the 12th floor. It comes down, it loses energy, and it bounces up to the 8th floor, and it just starts to trickle out. And we're getting this massive bounce that it experienced. But the volatility is going to diminish in Boeing as we kind of reach that equilibrium. And I think it's going to be a big waste of time stock. And there's going to be a lot of people trapped in it who, if they didn't get scared out on the way down, they'll get worn out as it takes time to rebuild this one.
Absolutely. Well, the last one we have time for is Facebook. And Facebook is, first of all, one of my favorite examples of using that baton handoff type of approach. But, can you talk a little bit about the anchored VWAP ribbon and exactly what that entails? So the thing that we have been posting a lot about on Twitter, on our TrendSpider account, is using the volume by price and the anchored VWAP together. Well,
Right.
Brian came up with an idea, and this was a while ago, and it just took a while to really implement it. But the idea of being able to see the anchored VWAP and implementing the volume by price within that, and essentially it becomes a function of the thickness of the anchored VWAP is where your big chunks or volume shelves are on the VWAP. So
But
can you explain a little more about that?
yeah, let me just sorry for making people dizzy scrolling around like that. Oops, I meant to grab this. Here we go. Now, if we go back to what you're saying is, the layering or pass the baton. First, we had from the low that was hit, so we draw one there, we anchor one there, and then we could anchor one here as well. And then it hit here. So as long as it keeps hitting these and holding, it shows we have successive higher, support shelves basically. And if I create another one off of this candle, I have to isolate the candles sometimes. Anyways, so let's go back. So it hits this one. Now it's broken those two, and it's at this. So what we want to do is say, if we take a look at the properties of this volume weighted average price, my black one from this low over here, what we can do is go in under the bands. And, so you've got standard deviation. You can add the standard deviation around. You can put percentage or the ribbon. And what the ribbon allows it to do is to take a look at basically the thickness of this line will indicate how much volume traded at any level. So it's the first iteration, and maybe we need to. Maybe I'm not looking at it properly. I've just got to play with this, so I don't. I think that the line stroke, maybe make those a little bit bigger. The point is to try to marry the volume weighted average price along with the volume at that price on the side. So you'll get that band to thicken out where there was heavier volume. And then again, you can go in and say, it's not always a static level, so let's give it a percentage around there. And if you would give it as you can see here, Fibonacci levels that you have them put in, now we can see that it's more of a area. And that's the way I was always taught anyways about a trend line, for instance, is that, a lot of people will look at it and they'll say, well, you need 2 points where you need 3 points and that only has 2. But in that they'll use a pencil and a straight edge. Whereas I was taught from Larry McMillan that you want to draw your support and the resistance, your trend lines as, with a crayon. Because there's gonna be some they're gonna be porous. It's gonna move, oscillate. It's not gonna hit perfect. You'd have to be a fool to think it's gonna hit perfect each and every time. Now, when you go back to Boeing, the way it hit off that highest high, it was to the penny, but it tells you that's the area. And when we have the area of interest, we switch down to a shorter term time frame and say, this is where I want to explore carefully to see if the buyers are in fact starting to regain control. But then when we switch down to a shorter term time frame, we say, here's a potential level it can bounce, but do we have any evidence yet? And the answer is no. We're still just kind of caving in here on this 2-hour chart, on this 15-minute chart, 10-minute chart even, that we're still just kind of the sellers are in control here. There's no reason to be looking to be a buyer yet, or acting to be a buyer. You can look, but the evidence isn't there. It's lower highs and lower lows, even on that 10-minute time.
Makes sense. So as far as kind of trading, do you like for the what's the purple line you have on there? Is that the SMA 50? I think you had the SMA 50 up a little bit. So are you using Like, do you look for confluence of like an anchored view app and like, for example, this
Yeah,
perfect.
that's a 50. Yeah.
So are
So
you looking for that type of confluence?
absolutely, and so I can just tell by looking. I don't need to draw Fibonacci on here. You know, from this low to this high, a 38% retracement will probably be about 205, 50% right around 185, and that 2/3 down at 170. So if I have a volume weighted average price, a 50-day moving average, and a 38.2% retracement all come together in the same area, it does take a little bit more, give me a little bit more weight there, because I'm saying, okay, let's think about the people who shorted Facebook on this failed breakout 4 days ago. Did they short and now they're looking to cover at a 50-day moving average? Maybe that could be a source of demand, less supply and more demand. We
Yep.
might have natural buyers looking to buy at the 50-day moving average, more demand from outside, you know, from a cash holder looking to add demand. And then if it is a key volume weighted average price, I'll say, well, there could be programs designed to buy at that volume weighted average price right here, right now, because of that volume weighted average price. So it tells me that there's more people coming to the same conclusion, but for different reasons. So one person, you know, it might vote for the candidate because they like their economic policy, because that candidate nails the economic policy. Then they get their whatever policy. I don't know why I'm talking about politics, because I hate talking about politics. But the point is, when you can gather them all together, and we get three different groups of people, four different groups of people, five different groups of people coming to the same conclusion that it's time to cover their shorts and maybe start buying in the same place for different reasons, it definitely adds a little bit of extra weight to that area.
Makes sense. All right. So I found out what the issue was. Can you take off all of the anchored view? Pretty much, let's do a clean chart. And I know what the issue was. It has to do with the opacity.
Okay. So how do I clean them all off, Jake? Is there a shortcut to get everything off here?
So right click on all of them or just one of them.
Oh, right. Okay. And then
remove all of them. And then just if you go to the side there where it's got the 4 anchored view apps, just turn them off on the daily. Yeah, perfect. All right, so if you can do me a favor, if you can anchor the volume by price from that that low that we were working on.
Was it here?
Yep. So, well, first of all, if you can put the VBP start there, just so people can kind of understand
what that
is.
Let me get rid of this one. And
beautiful. Or no, if you can, anchor it from that date there. Yep, perfect. And then if you take off the SMA 50, just so we can have it completely clear.
All right, well, I can do that in here.
So which one?
I thought I did it.
Yep, got it. So the turquoise one at the bottom there is the one that we're going to be using. So go to bands and go to oh, there we go. There you go. You can exit out of them there. Perfect. So that one at the bottom, if you go to first of all, go to VBP ribbon and then increase your opacity. So increase the back opacity there on the left, right under date. All right, and then apply. So you'll see there is that thickness there. And so if you can put the anchored volume by price from that same date, we'll kind of understand why it's thick there.
Okay, good.
And that will give us an idea of kind of what exactly the ribbon is telling us. There we go. Beautiful.
Oops. Okay. So right in here, you see where it's thicker. That's where you have that higher volume node at 74 million shares.
Mm-hmm.
That's why this volume weighted average price gets thicker at that area. So let me increase the opacity all the way so we can really exaggerate it. Here we go. Yeah. So now we're combining the volume weighted average price there and the volume nodes over here. So this thin area, you can see that's the thinnest point of that anchored VWAP.
So if you can you do the middle in the drawing tool, the rectangle that's got the little dotted arrow thing down? Yep. If you just highlight that where the volume shelf is, I think that will give people a little bit of a kind of a visual of kind of what we're seeing there. So everyone, just to note, that is getting thicker there because of. Oh, is it not working? You may have
it's in there, yeah.
Oh, okay. Yeah, so you can move that little purple area and make it bigger if you want.
So
Yep.
bring it to here, for instance.
Yep. So right there, you can tell that volume shelf is kind of showing where the anchored VWAP is getting fatter because that's where the next volume block is. So it allows you to kind of visualize, okay, in this particular spot, this is where the anchored VWAP has more kind of buyers at below, or at least at that point in time. These buyers can easily become sellers.
More business transacted.
Yeah,
more history and memory. There's more price memory there.
Yep.
So it's likely to be an area where business halts and kind of reevaluates the value in that area.
Yep. So no, that's something we weren't able to see that well before, but you guys can see kind of where it gets a little fatter there, and that's exactly what Brian kind of wanted to do, was highlight where not only the anchored VWAP is, but also where that price memory is, and that at least from my experimentation, learning from Brian. And the thing was, I didn't know what an anchor was, and I think I mentioned this in the video. It's like the only thing I had known what an anchor was from boating, and I don't even boat that much. So, the anchor is not just for the VWAP, it's for the volume by price. It's being able to understand where the status quo has changed in the market. And I think that's the most important thing with anchoring, is being able to understand where that, because the status quo is essentially where sellers became buyers, where buyers became sellers. And that kind of changes the overall environment of the market. And being able to visualize where those zones are within the anchored VWAP is really cool. And I'm excited to check this feature out more.
Yeah, me too. With day one, I'm super impressed with what you guys all rolled out tonight. It was unbelievable.
Well, big shout out to the dev team. I myself don't even know how to read a line of code, so it sure as hell wasn't me. But the dev team is always working their butt off. Huge shout out to them. Really a shout out to everyone at TrendSpider, because without every single person on the team, this would not be possible. Everyone really makes this whole machine go kind of oiled and go running every day. And so just, the production team, the marketing team, just everyone working together really helps this product bloom. And we're excited to continue to add a lot of cool stuff. And I'm sure there will be a few iterations of this new volume by price ribbon VWAP volume by price ribbon. And, Brian, I think that's all the time we have for today. Especially, I want to respect your time and everyone else's time on here. We weren't able to get to everyone's chart requests. I may have a little time later to put some of those in there. And like I said, I've learned from Brian. He's pretty much taught me everything about anchoring in the anchored VWAP. So what he would post is likely what I'm probably going to post tonight, just from the logic that he's taught me on it. So I'll try to get to some of those requests. Brian, one more cheers if anyone wants some of these TrendSpider mugs, we got TrendSpider on them. They're actually keep things nice and chilly. So we do have some different types of swag coming out, some hats. If you guys are interested in helping support TrendSpider and the team, let us know. We will be rolling some of that stuff out soon. Brian, a massive thank you, not only for being on here, but really helping me along the way, learning this stuff. It's not often where you find somebody who's this much of an expert, who's just willing to share their knowledge, and everybody appreciates it, myself included. And thank you so much for joining tonight.
Glad to be here. Thanks for having me on, and keep doing the great work adding this stuff. It's fantastic what you guys are doing in a short period of time.
Thank you so much. Everyone has been a huge support system, yourself included, and it's only making us more motivated to to get new innovative stuff out there. And like I said, a big shout out to the dev team, because without them, none of this would be possible. So thank you everyone for joining. Have a great Sunday night. Thanks for joining the virtual happy hour. This is the first time I've still had a beer in my glass after an hour, but you know, that's the beauty of having a show at the same time. So everyone, thank you so much. Brian, have a great night, and I'm sure we'll talk to you soon.
All right, take care. Thanks, everybody. Good night.